Good evening, it's Quant Trade Edge, and today I'm looking at a Forex trade that's set up on the S&P 500 today. And unlike all of the trades that we've had recently, this one failed. But what's beautiful about the failure is it gave us information in failing. So coming into today, we had this setup bar, this reversal bar on the CPI and FOMC minutes where we did, set a 2B trap, the 2B pattern where we had the test above and it's the takeout of that below that triggers the pattern. And, so this is a string of up bars and this would have created a down bar. And in doing that, then, we look at the time that it happened. It happened at 6:30 p.m. Central. So a 30-minute chart is a reasonable expectation to have our some people call it kind of a liquidity liquidity suck, where when the breakout to the downside has happened, you get that counter move to suck in as much liquidity as possible. And it did satisfy our ABC pattern where we had one leg up, one leg down, one leg up. And this right here would have been your risk bar. And this bar was the 230 bar, would have been around Europe open. That would have been your risk bar. And that risk bar, we would have expected to have multiples to the downside. This bar was about 5 points. 20 points would have gotten us to 4106. Not that far of a reach, even beyond just this breach right here. But what's interesting is we got this pop-up here that did take out that high by exactly one tick. That was an early warning signal that the Forex trade, was not working. And that obviously is where your stop would have been if you used this as a risk bar. But when what's, quote unquote, supposed to happen doesn't happen, you typically get a bigger move in the other direction. And that's what we saw today. We saw a big move in the other direction. And, and now we are seeing a bit of a cup and handle pattern form up against the spike high from the news. Let's see, 7:30 would have been the CPI news. So we are getting this little, cup and handle pattern forming. We'll see how it plays out. But going back to the daily chart and let's see, removing all of this noise here. Going back to the daily chart, since this was a 2B pattern, if we take out this high at 4177.75, so call it 4178, which we're barely hovering beneath, that would invalidate this 2B. And the question is, what happens when that happens? This could be one of two situations. One is the 2B has triggered, and then this is the ultimate gut check going up to within 3 ticks of that high. We got to 4177 versus 77.75. But given that we are spending more time up in this area, I don't actually think that that is the scenario that's playing out. I think what will happen is we will, take out that 4178 level and move even higher. And, part of that is if we look back to the NASDAQ chart, and we pointed this out on a different video that focused on the 2B pattern, you'll see that we had this little poke here, and no, I'm sorry, the 2B that failed was actually this fail. Right here, this high was 13,068, and this high was 82. So we ticked above it, and as soon as we tested below it, that should have triggered the 2B sell, and we would have gotten further downside. However, it just left a tail, came back up, and basically left a trap of anyone who got short there. And then the immediate next thing that happened was 3 green candles burning to the upside. And then really all we've had since then is a very clean ABC pullback. So the NASDAQ is also another situation where if we take out this upside, we would have a good 4x setup. That would be 13,228. But the thing that I'm focusing on here is the fact that when you had this 2B sell triggered and failed, that failure led to 3 straight candles to the upside. And over here, we're looking at a 2B sell that triggered and failed, and it didn't just leave a tail, it actually reversed the same day. So if we take this high out, call it 41.78, we could potentially have a nice little couple day rally there. So that's what I'm looking at. Stick to the process. Failures are a part of it. Not every trade is going to be a winner, but when it does fail, if you are following your process, it gives you good information. If you have a losing trade because you didn't follow your rules, because you tried something impulsive, then it's just a losing trade. Don't read anything into it. But when you're following your process, even the losing trades give you information to tip you off on the market's next direction. So that's all I had today. Good luck out there.